All right, welcome back, guys. So now let's look at another pattern called channels. Okay, so we have three types of channels. One is called a sideways channel. Another one is rising channel. And the third one is a falling channel. Okay, if you look at a sideways channel, right, it is nothing but two parallel lines where price is making equal highs and pretty much equal lows. Okay, and it is just moving in a sideways formation. So we have two ways we can trade channels. Okay, first way is we trade the breakout, and the second way is where we sell at the resistance and we buy at support. So let's look at this. So now if we're looking at the breakout, right, I am going to enter a long position if it breaks out towards the upside. Okay, my stop loss will be the midpoint of the channel or the mid level, and my target will simply be the distance of the channel or the width, we can call it. Okay, so we add that to the top and that becomes my target towards the top. And simultaneously, we can take a sell trade if the channel breaks towards the bottom, right? So we will enter on the breakdown, stop loss will be midpoint, and target will be the same thing, the distance of the channel. So this is the first way we can trade a sideways channel, which is a breakout. Now the second way we can trade a channel is where we will buy at the bottom of the channel, the lower end of the channel, okay, keeping my target as the upper end of the channel, which is right here. Okay, and the other way is where we sell at the resistance point at the upper end of the channel, keeping the lower end of the channel as my target. Okay, now as we learned in trend lines, right, how do we make a trend line? We simply need two swing highs and two swing lows. So in this case, I have one swing high, second swing high, so I can form this trend line, and I have one swing low followed by my second swing low, so I can connect these 2 points and make a trend line. And when you see a parallel formation, that is called a channel. Okay, so just keep that in mind. We need minimum two swing highs and minimum two swing lows, and if it's in a parallel formation, then it is called a channel pattern. Okay, so these are the two ways we can trade a sideways channel. Now let's come to the rising channel. Now in a rising channel, what we have is higher highs, right, where price is in a nice uptrend with higher highs, and higher lows, as simple as that. Okay, so if we're trading the breakout in a rising channel, let's say it breaks out towards the bottom, so we will enter short the moment it breaks this bottom trend line. My stop loss can be the mid level right here, and my targets will be the two swing lows. That's the first one, and this is the second swing low. These are my two targets. Okay, now we can also take the breakout towards the upside in a rising channel. So if it breaks out towards the upside, I will enter on the breakout, okay, keep my stop loss at the midpoint, right? Now target in this is slightly tricky, but we need to keep it equidistant to the width of this channel, right? So we draw a parallel line equidistant to the width of this rising channel, as you can see here. Okay, so that will be my final target for this breakout. So this is how we trade the breakouts. Now we can also trade the inner part of the channel where we buy at the support with the upper end of the channel as my target, and we can sell at the resistance with the lower end of the channel as my target. Okay, and in this case, guys, stop loss will simply be above the, if we're selling here at resistance, my stop loss will be above the entry level, and if we're entering here at the support, my stop loss will be just below the support level. Okay, and we'll look at examples. If in case you're getting confused, we'll look at some chart examples just to clarify everything. Now let's come to the falling channel. Okay, if we're looking at the breakouts, then I will enter long if it breaks out towards the upside. Stop loss can be midpoint, and my targets will be first swing high and second swing high here. Okay, now keep one thing in mind. In a falling channel, we will not take the breakout towards the lower end, the lower side. Okay, and why is that? Generally, as per my experience, these kind of trades tend to fail. So it is best to avoid the breakouts towards the bottom. Okay, so keep that in mind about a falling channel. Now, if we want to trade the internal part of the channel, then simply we buy at the support level, keeping the upper end of the channel as my target. And we can also sell when price comes to the upper end of the channel, right? Which is basically resistance, keeping the lower end of the channel as my target. So now let's look at some examples. Okay, so I have the chart of Nifty here, and this is the daily time frame. So very recently, we got a channel breakout in Nifty, right? This was a rising channel in Nifty, and we got the breakout right here. Okay, so now if I'm entering here on the breakout, midpoint is my stop loss. Okay, and target is simply the parallel line, right, which is equidistant to this channel. So I would book profits somewhere, in this area. Now let's look at another example. Okay, we had a nice rising channel in Nifty. You can see how it was just respecting the borders of the channel, right? Each time it would hit the upper end, it would fall back. Each time it would touch the lower end, it would go up and touch the upper end of the channel, right? So we can trade channels internally, or you can also trade the breakouts. So this day, Nifty broke out of the channel here. I can place my stop loss right here at the midpoint. And now my targets will be the next swing lows. So this was a swing low. This could be a swing low, or I can keep this as my final target, right? And eventually both the targets meet. So let's look at another example. Let's see Reliance. So in Reliance, we had a nice rising channel here, right? So if you guys can see how I'm connecting these, right? Here's the first swing high, here's the second swing high. So I can pull this trend line and stretch it forward. And then I have, this swing low and this swing low. So I have two swing lows and I can stretch this line going forward. Okay, so just look at the number of opportunities that this pattern gave us, right? So now that I have the two swing highs and two swing lows formed, right, now I can start trading this as a channel. So the moment it comes to the lower end of the channel, right, I can enter my buy position here with the upper end as my target. Okay, and now the moment it comes to the upper end of the channel, I can take a sell trade with the lower end of the channel as my target. Now again, when it comes to the lower end of the channel, I can enter again, I can enter long here with the upper end of the channel as my target. And now when it comes to the upper end of the channel, I can enter short here with this as my target. But in this case, it would not hit and our stop loss would go and hit, which is absolutely fine. It's a very small risk, small stop loss for a highly big reward, right? And now as it breaks out, we can enter the channel as a breakout trade as well. And keep a target equidistant to the width of the channel, right? And my target would hit somewhere up here. So I hope this is starting to make some sense now, right? How we can trade the internal channel and we can trade the breakout. Let's look at one last example here. So this is McDowell daily time frame. We can see how price started to form this rising channel and how beautifully it was just trading inside of it, right? And the moment it broke out here, we would enter on the breakout, okay, with the first swing low as my first target and the second swing low as my final target, right? Which in this case, both targets achieve. So you can play it internally or you can play the breakout, right? So channels offer both opportunities in this case. So this is it for channels, guys. I hope it is making more sense now. Let's move on to the next pattern.